morning, everyone. Today is Wednesday, May 4th. I'm Marv Eisen of Timeless Dollar. And today, starting out the day as I do every day, is looking at the economic calendar to see what announcements, if any, are going to be made that might have market-moving tendencies. And guess what? Today at 2 p.m., we have an FOMC announcement. Now, for those of you who are not sure what the FOMC is, it's the Federal Open Market Committee meeting where the Federal Reserve meets 8 times a year and announces changes or modifications to interest rates. Interest rates have a big effect on stocks. So without further ado, I will point out that the rate anticipation is between 1/4 and 1/2 point. Now, Chairman Jerome Powell stated last week, or maybe 10 days ago, that interest rates might go up as much as 1/2 point, which is uncharacteristic. And that's in order to deal with runaway inflation. So let's go over now to the morning news. Now, just one more mention back on the announcement. At 2 p.m., it's a good idea to be on the sidelines, keep your powder dry, wait to see what shakes out, because the market is going to be very volatile just prior to 2 p.m. and for maybe a half an hour or so after it. At any rate, moving over to the morning news, S&P up 20, Dow up 67, NASDAQ up 27. Really, these numbers really don't mean anything, because the big news today is that the market is anticipating that 2 p.m. Fed announcement. And really, it's a real mystery this time around, because rates haven't gone up in years. And now, with inflation seemingly running away, the Fed is going to take steps, or should take steps, or has to take steps to keep it in check. And they're really damned if they do and damned if they don't. So let's see what is going to happen at 2 p.m. Now, moving over to the S&P, this is the micro Emini chart. Of course, the Emini price chart is the same. And you see my trading zone drawn out here together with the previous day's close, this black horizontal line. At any rate, this is the chart from yesterday, May 3rd. Yesterday, the trades were strictly bounded by support and resistance. Support over at 41.51, resistance at 41.90. And there are a couple of things in this chart that I want to point out to you. I teach in my course 4 specific trade setups, and you really don't need a lot of trade setups. You need to be able to recognize them and be able to interpret the market. And of course, in terms of any conforming indicators. Now, I only use one indicator. That's down here. That's a relatively fast stochastic. But the market set up in the morning, opened up at the previous day's close, so there was no gap trade, and stayed around that level through the morning, rose up to 41.90, and then back down, back up, set up a resistance line at 41.90, and a support line down at 41.50. But I want to point out one thing. For those of you who use stochastics generally show where the market is going to turn, may turn, because nothing in the market is written in stone. But a very reliable way to read the stochastics is right here. You see these two peaks? Well, this one is at the point where the market is at our high of 41.90, 41.91 actually. And then there's another one. The market is again right at that level, 41.91. But notice that the stochastic is lower. And when you see the stochastic in disagreement with the actual price, trust the stochastic. This indicates prices are reliably headed for a downhill trend. And that's exactly what happened. So yesterday was support and resistance trade day. And there are 10 points between each horizontal line. So if you were able to recognize this trade, this support and resistance trade, you did very well. Again, the support and resistance was between about 40 points. So it's a very substantial number of points that you could have picked up. I'm going to go back one more day. I want to point out something because support and resistance, when we look at a chart like this, relatively easy, all right? The support and resistance days are relatively easy to read. You have to be patient and find them, but when you see a support level or resistance level confirmed by an indicator or previous prices, it's a good place to take a trade. So that's a trade that I highly recommend. It's one of the 4 trades that I recommend. The others are the gap trade, momentum, and time and price. At any rate, going back one more day to May 2nd. Now, May 2nd, prices again opened just about at the close of the previous day. Now, prices gyrated throughout the morning, and this is common. In the morning, the first half hour to an hour, prices gyrated. And also in the first half hour to an hour, the intraday high or low is typically put in. And that's something that is used with the trading zone. And I'm not going to go into my trading zone today. But in looking at this chart, many traders trade only in the morning, the first hour and a half or so in the morning, and then an hour in the afternoon. As a trader, you're missing an opportunity if you don't stay with it throughout the day. So at just after 12, the market began a trend. There was no trend over here, no trend. But just after 12, from 12 to about 3 p.m., the market went into a trend. And if you recognize that, you could have taken a trade. But look what happened here. At 3 p.m., a marked reversal. What happened here? The prices were trending down. Why did they stop? And is there a way to determine where something like this is going to end? And I want to point out these 2 candle patterns right here. You see this big red candle followed by a big green candle, and then a big green candle followed by a big red candle. When you see 2 large candles like this, and they're sort of out of characteristic with what came just before them, take note, because this indicates almost always a change in market character. So when this happens, when you see this, and it doesn't matter what trade you're in, good idea to get out of the trade, stand by. I mean, if you're underwater, typically what will happen is the trade will reverse in the direction of the second candle. So at any rate, following at 3 p.m., there was a momentum trade. Now, momentum trades, you have to trade quickly. If you look to get in on a limit, you're probably going to be left at the station, and the market's just going to move smartly away from you, even though you correctly thought that a momentum trade was in order. In this case, again, this was 1, 2, 3, 4, 5, 6, 7, 70 points. Again, there are 10 points between each horizontal line. So momentum trades, in order to play a momentum trade, you've got to place a market order. At any rate, watch for the FOMC announcement at 2 p.m. Get out of the market before then, 1:30, 1:45, certainly by 1:45 the latest. We'll see what happens. The market is in the throes of recession, war, COVID. My God, we have a lot of things going for us. But nevertheless, every day is a day of opportunity. Remember to watch those trades. If you don't know how to trade, if you don't know how to recognize trades or how to play the market, check out my course at timelessdollar.com. Take my free course that will show you the pitfalls and the traps of how the market suckers people in and causes them to make trades that are against their best interest. This is Marv Eisen for Timeless Dollar. Thanks so much for watching. Trade safely, use a lot of patience, and I'll see you in my next video.